what we're going to do is bring all three of our banking representatives up. Just have an open, we got about 30 minutes set aside just for question and answers. And I think these questions can be directed towards one bank, or if it's one that applies to all three, you know, feel free to do that. So to kick us off, I'm going to start off asking one about business plans. So if I'm a beginning farmer just getting started, I have this idea, but I don't really know what goes in a business plan. What are some resources that these folks, especially just getting started with an idea, where can they go to get some help on a business plan, and how professional does it need to be before they come in and you guys look at their operation? So Chris, we'll start off with you.
There are a wealth of resources for a business plan. Longwood Small Business Development Association is one that we deal with. They're based out of Petersburg, but it's a free resource. You can contact them, you can go meet with them, give them your numbers, they'll sit down with you, they'll sort of map out a landscape for you on that part of it. As these guys said, that's sort of the main thing, particularly on a startup business. If you're starting a new business, that's going to be vital for you to have is a good comprehensive business plan, and which will include your projections, what you're thinking, what your business is going to do, your projected expenses, all of that, and they'll put it in a nice format for you that's easy for the banker or the lender to sort of evaluate. You guys want to add to that?
I can add a little bit to it. Farm Credit of Virginia's has a knowledge center that has a lot of resources about that. Matt alluded to that earlier, I believe it was. And but one thing I would tell you about a business plan is make sure it's yours. I've seen a lot of times somebody comes in and brings a business plan to us that's fluffy and looks great, and there's nothing in there that's their information. They paid somebody as a consultant to put together something that looks good for them. So really, I would prefer for you to come in with your information. If it's just a page of notes that you have about what your operation is and what you're going to be growing and how you're going to market it, how you're thinking you want to sell it, that's fine. Whatever it is that's your own, make it your own. Make sure it's your information in there, and make sure it is of value. Don't just go and try to get something that looks good to impress a lender, because I'm gonna read it and I'm gonna figure out whether you put it together or whether somebody else put it together for you when you can't answer questions about it. So make it your information.
Yep, I agree 100%. I was going to say the same as Chris. And you know, one thing I try to tell folks, and maybe just to add a small piece, is put some financials in it. You know, we love to read something, but we're loan officers. We want to know the financial part of it, and that's the part we're going to lean the most on. Not just the idea or the plan or where you're going to be located, but put some detail on financials.
All right, good deal. Since we're recording this, if you have a question, raise your hand. We'll make sure you speak in the microphone. So, Miss Jewel, you all know Miss Jewel Burnell. She used to be the Commissioner of Agriculture, and then just had a time at USDA as the Deputy Secretary of Agriculture, like number 2 of USDA, and she's back on the staff here at VSU, so she's kind of a big deal. So anyway, with that.
Thank you, Mr. Secretary. And I appreciate you asking the question because there are folks here who I can imagine are new or even just starting to think about this process. In addition, if some of these things like business plans look intimidating to you, I think that's also where Virginia State University with the extension program and the small farm outreach program can walk you through some of that, so it's not as painful. But for many folks who are here, applying for loans seems very intimidating. And also, it's a process. You know, people are fearful of hearing a no. You all have been in this for a long time. You have probably helped people get from a no to a yes. And I was just wondering if you could share, through all of your wisdom and experience, how you have helped people, even if it's a personal story, work through maybe an initial no to a loan, but you got them to a yes, and what you did to get them there.
Yeah, and that's a great question and a great talking point that I'm glad you brought up. I think all of us standing here are going to agree that we want folks to come to us and feel comfortable coming and opening up. One thing that's difficult as a banker or a loan officer is we're going to be asking you a lot of questions. The things that you're supposed to not put online, like what's your social security number, your taxes, blah, blah, blah. And I know that can be uncomfortable for folks, but we want you to come to us and be comfortable and know that, I guess the second part of the question is a no coming to a yes. A lot of those no's are based on experience. We don't want folks to fail. And we have this conversation with a lot of folks on a lot of no's that a lot of times that no is because we don't want you to be hurt. And you can get hurt by having someone loan you money.
One of the things I'll add is get started early, right? So you can never get in to see a lender too early in the process. It might be 12 months before you think that this might come to fruition. I just met with somebody that's thinking 12 months down the road, what do I need to think about? What do I need to do? Get in there early and start the planning because if we give you a no, we make no money, right? We make our money off the interest that you pay to us on your loan. So we want to do everything that we can to help you be successful. So get in early, ask us questions. Don't feel intimidated meeting with the lender. We're going to give you advice to try to help you get down the road to where you need to be. We may challenge you, right? Recently had one I talked to and they hadn't thought 3 steps ahead. They had thought about one thing and 2 things, but what are those risk items that you need to think about, the what if? And that's where our experience and our lenders' experience from being in the industry so long can help you think steps ahead on what you need to be thinking about when you get involved in the process early. We don't want to be, I've already signed a contract to put a greenhouse up. It's going up tomorrow. I need to figure out how to get the money. When, your lack of planning does not create my emergency, right? So plan early and make sure you're getting started early and meeting with folks to ask the questions.
That's a great question, and we see it every day. We don't like to issue a denial. We like a denial counter, which means we like to present options. And, I think of one construction loan cost a couple. They were trying to build their house 3 years ago. They applied. Their ratios were a little elevated. We presented options to them. Like, look, you may want to see about paying this off. You may want to consider maybe a part-time job. Options to get those in line. They applied the next year, still a little out of line. There were some other things going on. Well, this past year we were able to actually get that done for them, and it's because, like these guys said, we want you to be successful. We don't want to say no. We don't want to just deny somebody. We want to give you options and feedback of things that you can do to improve your situation, and ultimately, allow us to do business with you, which is what we're here for. So, great question. Yeah.
One thing I want to just piggyback on what Brandon said is that sometimes, the answer may be a no, and at the end of the day, it may be best for your situation. When I was 25 years old, I grew up on a farm. My neighbor had a poultry farm that I leased for a little while, and then he wanted to sell. These were the old double-deck houses. And I went to my local farm credit loan officer and begged and pleaded. He's still my loan officer today. Begged and pleaded for him to loan me money to buy these 3 older chicken houses, and they were 25 or 30 years old at the time, and just a lot of risk involved. But I was convinced that I could make it work, and they eventually told me no. And 2 years later, Pilgrims cut the contract on them and shut them down. So sometimes, the no was a hard answer at the time, but I'm so thankful that the answer was no, or I'd be paying today for 3 houses that are just sitting there empty. So anyway, great question. Over here, yes. Oh, okay. Hold on. Wait for the mic. You're good. Thank you.
If you can, be patient. My dad always says patience is a virtue, and truly it is. So just be patient with the process. Certainly the lender, like I said, we don't make money if we deny you, so we want to try to find a way to make it happen. I financed a brewery in Norfolk that's been really successful. The guy was a ham specialist, ham product specialist with Smithfield Foods, but brewed beer on the side and loved it. But it took us 3 years to get it going, 3 years. But he had his vision, he knew his product, he knew his inputs, he developed his cost, he wanted to use local products to make his beer, which was unique. And he's been very successful. He just opened a second location in Richmond. But just be patient, because we ended up using the Virginia Small Business Financing Authority to guarantee that loan. And that's how it happened. If we hadn't had that backing to get him going, that would not have happened. And now he's probably about to the end of that guarantee, but he's successful, so it worked. So just be patient. Everyone wants to be on your side, but to say no is also sometimes being on your side. So
Good advice, good advice. I saw another hand up over here. Yes, ma'am.
I had a question concerning the credit. When you have partnerships or couples asking for credit, is it still under the normal lending standard that has come up in this past new year about using the lower score compared to the higher scores? When you're looking at an average, is there any difference within it when you have two people in a joint loan? I don't know if I'm clear on that.
No, that's a great question. There's a clear difference between consumer transactions and business transactions. What we refer to as in farm lending, it's a business or commercial transaction. So we're not held to that standard. I think what you're referring to is on the consumer side with the Consumer Finance Protection Bureau regulations and that kind of thing. They do go by the lower score. So if it's two of you applying, they're going to take the lower score every time. With us on the commercial side, we can be flexible with that, so that we're not bound to that concrete score. We can, like these guys mentioned, we look at the credit report, we see what's involved. We do more of a combined view of that thing, of the credit scores, and then we make our decision based on that. Y'all want to add to that? Okay. Yes, sir.
Coming up behind you there. Thanks, sir.
Just to follow up on that question, what would be an average score that is required to get funding and finance?
An average score, was that?
Average credit score, yeah.
Yeah, we kind of look at we use Equifax, so a Beacon credit score of 675 would be sort of in our wheelhouse. We'll go down to 650 a lot of times, maybe even lower than that. It just depends on the situation. But to answer your question, 675 would be ours.
That is a 100 and it depends answer, right? So Chris talked about what their score is. Sheldon may have a different score than what I've got. And what I talked about we may use Equifax for our data source, and specifically like a Beacon 5. Sheldon may use TransUnion. I don't know what they use, but they may use Experian, right? So there is not a one-size-fits-all answer to your score has to be this, because it can be an it depends. If it's a scoring-based program that we're underwriting it to, there will be a score number that a lender is going to use on a score-based program. When you start talking about more commercial and getting to the larger loan size, it's going to be more based on financials, projections, your business plan. Your score will come in more from the standpoint of what is actually in your credit history and how you've managed your credit. We would use the credit report more for verification of what your history is, what your balances are, more than the score once you get to a larger aspect. So it's not this is the number it has to be, it's an it depends. I would generally say, and in the numbers I had the bell curve of generally how the scores worked out. if you've got a score, most any model, if your score is 700 or better, you're probably going to be okay most anywhere that you go, regardless of the model that's being used. Sure.
Yeah, maybe same thing Chris was saying. I know everyone in here is probably used to having, go buy a car, go buy a house, and it's like the one thing that they're focused on is your credit score. And maybe to clear up, as commercial or agricultural lenders, your credit score is not the only one thing we're looking at. There's kind of two far swinging examples, but an 800 credit score and a business plan that is really not going to work is probably not going to work for us. On the other hand, and I'm sure you all have run into too, I've had folks that have come to us with significant assets, a great business plan, and no credit score because they've never borrowed anything. So there's kind of your two large examples there, but the credit score is not everything for a commercial lender.
Excellent, very good. All right. Here we go.
Thank you. Good morning. I have two questions, actually. So when we're talking about the credit, are we looking at personal credit or business credit? Are we applying or for a personal loan, or should we apply as a business? And if we are applying as a business, at what point does the Duns and Bradstreet number and things of that nature come into play with you all? So that's the first question. Then my second question is specifically for farm credit.
You want to hit them all? Well, and maybe I'll be speaking more specifically for our example, and we don't really separate out business and personal, especially on a smaller operation, because what is going on at home is also going to affect the business and vice versa.
Okay.
So the credit would be not only that of the business, but also that of the individual.
Do you have any more to add?
I did want to make one comment. Typically, your small businesses, your LLCs, that kind of thing, you are the business. It's you. So that's where your personal credit score comes into play as a guarantor for that entity. So we do factor that in on those small business opportunities, which is mostly what we deal with.
Nothing else from me on the first question.
Okay.
They got it.
D&B,
I got it.
Okay, thank you.
just specifically on the D&B, if you're starting up a business, if it's a small business, you don't need a D&B number or anything like that. Like over time, you could look at getting something like that, and we'll pull D&B reports on larger businesses. But as they said, a lot of times it's just we're looking at your personal assets, your personal income, the business assets, the business income. The credit score is part of it, but as they hit completely, if you're running a business, the credit score is not as imperative as a straight up home loan or something like that Chris was referencing. So D&B on smaller business is not as critical.
Okay, thank you. Sure. Thank you very much. And then the second question, with the Farm Credit University, does that result in some type of certification or continuing education units?
No continuing education credit, no real certification. You get a nice certificate from Paul's signature on it as if you're a Colonial Farm Credit area focused person, or I think it actually has Dr. Cole's signature possibly on it as well. So you get a nice certificate there that says you graduated. But more it's the educational value that you get out of it, just to help you along, to help you understand all of our language of what we speak when we sit down with you.
Okay, thank you so much.
And I will say, as someone who used to work for Farm Credit and had a lot of interaction with the AgBiz Planner programs and Farm Credit University, those skills really, really do help. I've seen beginning farmers that have an idea that through that process are able to really put together a great business plan, which then in turn to them getting financing. So I would say the success rate is quite good. And that's open for other banks as well to participate in that program. It's not just Farm Credit only. So great, thank you. Yes, ma'am.
Good morning, and thank you for offering this information. It's been great. As someone who's new and just starting with farming, I don't have a lot of experience. So how much does the background and experience with actually owning or operating or working on a farm weigh into your decision to actually provide funding?
Really, it becomes, it depends. Right, that's a lot of answers. If you told me you wanted to get started and you had no experience and you wanted to start up with a 3,000 acre row crop operation, it's gonna be like, okay, let's put pause on it for a minute. But if you're telling me that you came in and said you wanted to start up, say, a nursery operation or something like that, you could say you'd been growing flowers for a period of time in your garden and you're just looking to expand, right? Help us understand what type of education, what you've done to help yourself in the past or in current to get started there. So it's not a perfect answer, but it's more of a, it depends of what's your history, what have you done to really help yourself. I know Virginia State has a lot of programs here at the farm with the field days they have and the different aspects of these programs here that can really help you to be knowledgeable, that give us some comfort that you've done the research and learning.
I can add.
Yeah, it's a crawl before you walk sometimes. That's maybe a simple way of putting it, is exactly as Chris said. And we get a lot of folks that come in that have no farm experience, and I think that's something that we all love about the area and the opportunities of the area, and Matt really hit on it, is you can be very successful on a very small farm with minimal credit needs, and you can be very successful on a very large farm. But as Chris said, it depends when you're coming in, but coming in prepared helps a lot for us.
I'll add one more thing and I'll pass it along. I just thought of one other part. Coming in to tell us that you know the market has a need for what you're doing and what you want to produce is going to be key. Because if you say, I've been and talked to this restaurant or I've been to this farmer's market and see that there's a need for something that the consumer has a demand for that's not being met, would be different than saying, this is what I'm going to grow, and hopefully there's a need and demand for it, right? So you can demonstrate that too. That actually has a lot of impact there.
I agree with Chris. The fancy name for that is a feasibility study, but we want it in your terms, basically. And I just wanted to add, if you're a startup, you don't have historical financial data to sort of support what you're doing, the business plan is crucial. I mean, if you can get that comprehensive and get everything in there that you're looking to do, that's vital for you as a startup business. Great question.
Excellent. I'll make a general comment. I think we have time for one more or so, but a general comment. When we first started these a year ago, after a meeting with the governor, in my mind, I thought of beginning farmers were all going to be, 25-year-olds coming to the table. And since we've done these, and I look around the crowd today, it's been really eye-opening to see that the majority of people who are interested in beginning farming are older in life, 40, 50, 60, which I think is wonderful. And so I think it just goes to show that there's a demand out there for people, no matter what age they are, to want to be engaged in growing their food or, being involved in production agriculture. And so that's been one of the things for me that's been kind of eye-opening. I don't know if you all see that in lending, where it's not just the 22-year-olds coming in, it's folks of all stages in life that are interested too. So anyway, just an observation. Question, yes, or comment?
One other comment.
Yep.
Another thing, if you have the opportunity and you are interested in a particular industry, is try to intern in that industry for a little bit. Get a job, at the local nursery or that type thing, just so you understand all the challenges. Even if you're a worker bee, you're still going to see what the headaches are along the way for the owner, and sometimes that's really helpful. So that's just a way to start.
Great comment, for sure. I think we have time for one more. Anybody else got a question weighing on them? Yes, ma'am. Behind here. Thank you.
Thanks. Yes, this is fairly detailed, but when creating a financial statement, like you said, my farm is very integrated with my home life, but would you want to see, like, this is my farm assets, these are my personal assets, this is the part-time job off farm? How separate or integrated do you want that financial statement to be?
That's a great question. Typically, what we would do is start with the business financial statement and assets of the business, liabilities of the business, that net worth figure of the business, depending on the ownership. If you're 100% owner, then that net worth figure of your business is going to transfer to your personal financial statement as, an asset, basically, because that equity in your business is an asset. So we would look at both. We would want one on the business, a financial statement, and then also a personal financial statement from you as well. Yeah.
Get it to us in whatever form works for you, right? So the initial meeting that you have with your lender, bring it in whatever works best for you, and the lender can then help you work through and sort out what makes sense and where. If you have an entity, an LLC, a corporation, if you have a separate entity that is your operating entity or even a holding entity for the farm or any of your assets, we definitely want to see a separate financial statement for each entity separate from you personally. If you're just doing a trading as or doing business as, and you have the ability to have that separated out, fine. But if it's really a sole proprietorship lumped all together, you personally is going to be fine as well. So whatever format works best for you. To your point about off-farm income, yes, we would want to see tax returns for yourself personally, and if you did have separate entity tax returns, because your off-farm income is going to be probably critical to your farm operation being successful as well. And one more thing I thought about, going back to the previous question about how to get started, Lauren talked about interning like at a nursery. Find a mentor that's in that field. And that's the great thing about agriculture is we, just like the three of us compete, but we're all standing up here educating. You might be competing at a farmer's market with your mentor for selling your commodities, but folks in agriculture are always willing to share and mentor and bring on a younger farmer as well. So find a mentor that's in that same avenue that you want to be in.
Yeah, I think they got it. Maybe I'll share an example. I told everyone that, I farm and then here I am. But yeah, we, of course we take into account off-farm income. You can separate. I tell my customers, if you have 3 LLCs, we're going to break them all out and we're going to put them all back together again. That's what we do. Basically, if it's a small business that you're 100% of, everything that has, you're the circle, and everything around that circle is what we're looking at for essentials. But yeah, I joke with all of my customers, we're all farm income. Look at me, that's what I'm doing.
Fantastic.
So don't be afraid of that, though. I really do like to push on folks that, I think if you're here, you'd love to farm full-time, and there's nothing wrong with farming full-time. There's nothing wrong with farming part-time or a combination of all of them, but, make them complement each other. That's something that's really fun, is having your off-farm income potentially complement. And for example, there was a time when I had considered building greenhouses, and I worked for a gentleman that had greenhouses for years. It's still a consideration. But there's an example where you could be growing your operation and work for someone doing the same thing, and your off-farm income could complement what you're trying to grow.
Outstanding. The good thing is we have lunch coming up, and all of our sponsors and all the folks that are here today have representatives around the sides. So we have about an hour blocked off for lunch, but really the key of that is the networking. So please, we'll go out these doors. There's lunch. Kind of go around and come back in. You'll eat it here, and then take some time to visit with our folks here. We'll get started at 12:30.